The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the July 18th fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a terrific Thursday out there. Let's make sure that you and I, that we do everything we can to have a fantastic Friday and an extraordinary weekend out there. I'll do everything that I can during the next hour to just simply during the next hour to teach you about the tools for trading out here. We'll take a look at different patterns, A to B equals CD patterns. We'll look at market profiles. We'll look at Fibonacci retracements. We'll look at anything that we can that will assist us in identifying where these markets want to head to. This is a call-in talk show. That means you can give me a call. We can take a look at your stock chart specifically. We'll take a look at it at multiple time frames and try to answer for you where that equity is going. That means you can give us a call at 877-927-6648. I would be happy to field your call. I do have a newsletter service. It's called Mastering Probability. In fact, we have a little special running here. The folks at TFNN, they thought, hey, why not put a little special together since I was filling in for Tom. I did it on Monday and yesterday. And so if you do go over to the homepage at TFNN.com, I'd like you to do that. You'll see over on the left-hand side, you'll see what we call our little carousel area. You'll see my name. You'll see Mastering Probability. You can go ahead and test drive my newsletter service. You can sign up for it. There's no credit card charge or anything like that until day 31 if you decide that you like the service and you want to maintain it. Now, what's included with that, folks, there's a 90-minute money management workshop. And if there's any one thing that I know about this business that we're in, it's really all about the math. And so you want to understand the money management. For just simply that, even if you've done it, maybe you attended that workshop. Now, you typically charge about $150 for that course. And that's included in there and as well. Several years ago, I used to do 1-hour workshops every other week or so for my clients, and then we just started regurgitating, going through things over and over again. So there's about 30 hours worth of education in there. So if you're trying to take your game to the next level, understand some of these patterns, understand some of these things that we talk about, it's another reason to go test drive the service. That's only going to be good through this weekend. Now, that doesn't mean that you can't test drive my service otherwise. You know, one thing I've learned, I know it works for me, I don't know about for you. If I pay for something, I'll pay attention. If I get something for free, you almost feel like there's no value. So that's and that means when you normally test drive my service, I have you actually put down a deposit. You can still cancel it within 30 days with no issues whatsoever out there. So anyway, take advantage of that. Do that for yourself this week. Do it for somebody else that might be interested in trying to understand what the markets are doing, what technical trading is all about. Right now, we've got Dow futures up 9 points. They're trading out at 16,950. S&P is up 3, trading at 1956.25. NASDAQ up 13, 38.99. You've got the Russell 2000 just slightly green, trading out at 1129.80. Excuse me. King dollar up 7 pennies at $80.64. Gold is back $8. She's trading out at $13.09. Silver's off 18 pennies at $20.94. Light sweet crude off 20 cents. A quick peek across the globe out here. I'll talk about a quick look across the globe. We had Tiger Woods. He teed off on hole number 1, and he yanked it to another country, I think. Certainly on another green, and then at the same time, or just shortly after that, we had Sergio Garcia hit one out of the weeds on the second hole for a nice eagle out there. In any event, I'm really focused on the markets, but in the background, I do have the golf on, the Open the British Open Championship. So that's going to be a good weekend of golf. Nothing like being able to wake up early in the morning and seeing the professionals play some golf. In any event, let's go take a look at what the professionals are doing here inside of the markets now. What we had happened yesterday, if you didn't catch Tom's show, and you've probably heard about it since, most certainly, is I'm not talking about the incident over in Ukraine. I'm just simply talking about the response, in essence, to the incidents over in the Ukraine, over in Russia out there. And what the market did was it had a one-day rate of change VIX reading of 32%. It's pretty high. Typically, we see now it's not as high as it has been out there. We've seen we've seen about 12 higher readings actually since the VIX has been in place out there. But just simply when you get a VIX reading above 10% on any one single day, that's the rate of change. What you'll typically see is within a 48-hour period of time, you'll see some type of market bounce out there, and that's really what my expectation is today or tomorrow. We've got light trading sessions out here. Now, when it comes to the weekend, you've got options expiration today, so we should see a bit of continued volatility. Perhaps more likely to see the bounce come in on Monday. After all, who really is going to want to? Now, we've had, I believe it might be, you have to go check the records. I don't have enough time to do that here. We've had like 9, 10, 11, 12, 13 up Fridays in a row. It's been a fairly significant number out there. Maybe somebody inside the Tiger's Den knows. And typically you have an up Friday out there. That's going to tell you that traders are comfortable taking overnight long positions out here. So this may be the Friday where that's not the case. And so maybe a intra-session bounce like we're seeing a little bit right now. And then maybe the market moves back to flat or what have you. And just takes a bit of a rest. So let's go take a look at. So that's really the overall expectation of the market. Let's check in on gold right now. You got gold trading off $8. Let's go take a look at its market profiles, get a feel for what's going on out here. Now, gold. How about that? Gold really overreacting yesterday, I think, to the news. But we do have all this geopolitical risk out there. So. Is it truly the flight to quality is to go buy gold? I'm not buying that one. If we do take a look at the daily gold contract out here right now, what we will see is that there was a nice price relative strength divergent top that was put in. That was on the trading session of July 10th. Big reversals session with some volume to the downside. That was on July 14th. In my opinion, all we've seen here so far is just a little bit of a counter trend rally. If gold gets above those highs of 1346.80, then my conclusions are all wet. They're all dead meat out there. Otherwise, I think I'm going to continue with my position and my stance on this, which is that we're going to see gold go ahead and make a fairly significant low over the course of the next several weeks. That could even be a move down to 1193. Why do I say 1193? Just simply an A to B equals C to the downside. And the way gold came off the C point here on July 14th, that's really its message until it proves itself otherwise. And the only way to do that is, quite frankly, to get above that 1346.80, to get above that swing point out here. If we take a look at an intra-session time frame, if we take a look at the 240-minute chart out here, what we'll see is in overnight action price now is back below on its 240-minute chart, back below a support level, which is at 1312. Gold trading out about the 1308 area, so not necessarily a good sign for gold. Now, we'll really find out here. Yesterday, here's where the action really began. Let me go take a look at the 120-minute chart. It'll be a little bit easier to see that action. That was a 4-hour chart. So right here on the 2-hour chart, and that is, it's really considered to be a breakout session. So we'll find out if the move in gold was real. What you'll see is price will come back into this area. I'd have to say it's right around 1302, and at 1302 it ought to find support and then bounce from there. Now, if it finds support at 1302 and doesn't do too much today, don't get too caught up into that. Remember, the larger pattern here, in my opinion, is really to the downside. That's what's going on inside gold. Let's take a look at silver as well, as long as we're over in the metal complex. If we take a look at the daily chart inside silver, it doesn't really carry weight. It's actually stronger than gold. However, it too could have an A to B equals CD to the downside out here. Silver hasn't broken its support level of its market profile. That's at $20.70. You get a close below that. That starts to change its change in trend. How about that? Change its trend to the downside, and one of a retracement. Most likely. Light sweet crude, it's pretty much flat today. It's trading out at 102, and just a bit of change out here. Now, we saw a nice move off of the bottom. Light sweet crude on its 120-minute time frame, it formed a price relative strength divergent pattern. I'm not sure why I'm not getting the feed there, so I'll just have to switch over to one of my other charts charts here so that we can take a look at light sweet crude. We'll take a look at the Rhodes Momentum Indicator charts anyways. Just provides us with a bunch more information out here. If we take a look at when light sweet crude was moving lower into the trading session here of 12 noon, this is on July the 15th out here, we saw a little piercing candle and some follow through on that very next trading session going into the 4 p.m. time frame of July 15th. Saw a nice little bullish crossover here at about the 6 a.m. time frame on July 16th, and now we've seen a nice move up into an extreme bought condition. So we're now beginning to see a bit of a pullback in light sweet crude. The larger pattern inside light sweet crude is to the downside. If we take a look at the actual markets themselves, let's go take a look at the futures market. Let's look at the ES Mini as an example. Let's take a look at the daily contract out here. The daily contract yesterday breaking through its support level of its unfair low. Now, we really haven't seen that occur. We saw it occur just slightly. That was back on the trading session of 6/12, June 12th out there. We haven't seen that occur since June 12th, and that is really coming off of the bottom back on April the 14th. So it carries with it a message of being more neutral than bullish out here, neutral to bearish. A continued move lower today would suggest that, bearish is the right outcome, or at least a retracement out here. And resistance ought to be now what was old support. So 1962 is what I'm going to call it. 1961.50 is the exact number out here. Real resistance up at 1974 level. That's what's going on inside of the S&P futures. If we take a look at the NASDAQ futures out here, a strong like bull what the NASDAQ futures were able to do yesterday. They were able to get down to their market profile low and hold that as a level of support. New market profile occurring here overnight, so 38.53 is the new number. You see a close below that today. What you'll see as I pull this chart back here is we have not seen the NASDAQ futures close below a market profile low since coming off of that key reversal area back around the April 15th time frame. So key number to be watching today, 38.53 in my opinion. Right now we've got the S&P futures up 4.5, 4.25, NASDAQ up $15 and change. Our call number again, 877-927-6648. Hey, during this break, go to the homepage at TFNN.com, order my newsletter, get that free newsletter service, folks. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
investors. Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back, folks, we've got the Dow futures up 21, S&P futures up 5 out here. Let's go dig down into the S&P futures here. I had a question to Dan about, or I saw somebody asking about reconsidering a bounce in the market out here and when to go ahead and short it. Let's take a look and see what kind of message we can get here and look at the S&P futures. Let's look at the 30-minute chart out here. Now, we were looking at this chart yesterday. I'm fairly certain that we were. And if we take a look at the activity, now when we started off the day, let me try to get this correct here. Today is what? That's July 15th. Today is what? 17th, 18th. Okay. So let's take a look at yesterday morning. Yesterday morning, I've got a black line going across my screen out here. Very important level of support and resistance. 1963 is the number, 1962.75. That's what we want to really be focused on and paying attention now. Yesterday morning, as the market was moving down into the 7:30 a.m. time frame, that level held as a level of support, as one would have expected it to, for a number of different reasons. One, it was hitting that little invisible line of support, and the market was in an extreme oversold condition, so it needed to bounce. Now, the bounce there took it all the way up to 1976. We know 1974, I believe, is the market profile resistance area. We've seen the ES Mini, trade up as high as 1978, I believe, or pretty close to 1978. That was back on July 3rd out there. Those were the highs. So, that's a resistance area. And after the news about the airliner, crash, takedown, being shot out of the sky, which is just about as pitiful as can be. I'm not going to talk about politics here, but gosh darn it, I hope this world gets together and puts some pressure on the right folks out there. In any event, the news, the results, because we're taking a look at, how did the market respond to that? And take a look at this. Market moved down pretty heavily on the news. Now, that may have been a number of high-frequency trading systems that are out there searching for news. What they do is they're searching for words coming out of news services, and I'm sure that terrorism and airline crash, are one of those, or some of those words where the market just simply sells off. And interestingly enough, as the market did sell off, you tell me how this works, because that 1962.75 level, I've been talking about that to my newsletter subscribers ever since it was Sunday, as a matter of fact, and pointing out how important that level of support is. Not a swing point. And sure enough, price yesterday moved down. So one would have thought that, that news, that sentiment was going to go ahead and push markets lower. Yet it came down to that level and it found what? It found support and it bounced off of that area. And in fact, made a 0.618 retracement of that first move down. And then it started to give it up. But it really didn't crack until about the 2 to 2:30 time frame there. Then it cracked and then the markets certainly moved lower, got into that extreme sold condition. So now if we just take a look at that area that has been a strong area of support, now may become a strong area of resistance. I don't know the answer to that. 1963, though, 1962.75 is a number to be paying attention to. We just simply take a look at the last leg down. If you're watching us on TFNN on Tiger TV, and welcome to all the new eSignal version 12 users who have access to Tiger TV right on their platform. They can make it one of the little windows, in one of their screens, or just simply detach it, put it on a separate screen out there. If you take a look at from that move down at 10:30 yesterday morning, from the high at 1970. All the way down to the low that was put in here at about 7 p.m. or during that 30-minute session, 6:30 and 7 p.m. That's when the futures got down to the 1942 level out there. Now what we've seen is a bounce that has moved through, came into the 0.382 retracement at about 4 a.m., was doing it with a nice little wide-ish ranging bar out there. That's an indication that it wants to go ahead and move up to that next level. Just as a coincidence that the next level of the 0.618 retracement area is 1963.25. Now, there are no coincidences in life. So 1963 is the area that you want to be focused on. If we see it close above that, this market could even go back and test those highs at 1976. Nothing is out of the question out here. In fact, yesterday, prior to the, there's all kinds of indications that this market wanted to move lower. So, my preference would have been that the market would have moved lower without an incident like occurred yesterday out there. Because prior to that incident, the market was going to go ahead and make another attempt to take out its highs out there. And so, anything is possible. 1963, though, that is the level to be watching. If we take a look at a little bit longer-term chart, let me move over to a 120-minute chart out here. And one of the things that you are going to see is this nice little rising price channel here that the ES Mini broke out of yesterday. This takes us back into the April 13th, 2014 time frame. Price broke that, and right now all it's trying to do is get back into the game here. It wants to rejoin that trend. Maybe this 1958 area is resistance. That's what the 120-minute time frame chart would be saying. Getting back into the party, though, something to think about. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 54 points, trading out at 17,032. S&P up 7, trading at 1965. Nasdaq Composite up 22 points at 43.85. Russell up about 46 cents, trading at 11.34. And the X100 up 25 points. Gold back $8 right now. Silver off 19 pennies. Moving to the upside out here, we've got Google out with numbers yesterday. You know, this is kind of an interesting stock chart here. Google on its earnings date really is just simply, we'll watch how this trades today, but how Google trades on its earnings date usually sets the pace for at least a period of a few weeks with regard to the direction that it wants to trade in. We've got Skyworks Solutions, SWKS. That's trading up 8% here, up $3 and change. It's taken out a swing point with some volume, it looks like. Let's go take a look at it. Its most recent swing point out here was from the trading session of June 23rd, 2.6 million shares to the upside out there. Down yesterday with 6 million shares, but up this morning already with 1.5 million shares out here. Had a nice little breakaway. If this thing does ever crack to the downside, this is the area you've got to pay attention to. April 22nd, right in the level of about $37 to $36.87, something along those lines out there. But otherwise, a pretty nice looking stock chart out here. Just built a base. Should have some pretty good support out here at the 45.59 level. That is ticker symbol SWKS. Amazon up $1.95, Visa up $1.87, Alexian Pharmaceuticals up a couple dollars. Leading the charge to the downside here. Let's go check in on this. Real Page Inc. off 25%, off $5 right now, based on their earnings report out here. I don't see what they actually did. Revenue of 93 to 94 million. So I don't see the actual numbers out here. It doesn't matter. Let's go take a look at the stock chart. I hope that nobody owns this. This has a high volume low, by the way. Big, huge gap down. That's on the trading session of February 25th. That is obviously where it is already traded into. That has volume down there at 12 million shares. So we'll see if it can stop its descent at about the 1540 level. 1540 ought to be tested out here. If it cracks through that, then it's a real big problem for this equity. In fact, let me put it on a weekly basis. That may be the lows out here, that high volume bar. No, that is not the lows. The lows take you all the way back into the 2010 time frame, right around 1242. So you'd have to say it's trading into that swing point. That's probably where she is headed to, down about the 1242 level back from August of 2010. Boy, what a horrible looking stock chart that turns out to be. You've got New Skin Enterprises, NUS is a ticker symbol. They're off about 8% this morning. I don't see any news behind the trade out here. Let's go take a look at what it's actually doing. This had been, still may, I don't think it is any longer, had been a IBD stock, but we saw some real institutional selling inside this equity back on the trading session of January 15th as this came off highs with volume, 9 million shares, but it decided that wasn't enough volume off the highs. They really wanted to mark this stock down the very next trading session with 23 million shares. It is gapped down this morning. It is already below an area it should have been support. Its original breakout back in July of 2010. So it looks like everybody is gone from New Skin. Where will this head down to? Let's take a look at a weekly chart out here. NUS is the ticker symbol. This is nothing that I would suggest anybody look at getting back into. That is for sure. Now, this had, just take a look at this volume out here. Man, oh, man, just nasty. So where's this going to head back to? Well, you know, it probably heads back to its base camp, which could be December of 2012 in the 32 to 36 type area. NUS is the ticker symbol. Another high flyer out there that just simply bit the dust. Let's take a look at, what did I want to look at? Oh, I know what I want to do. Because we're coming to the end of the week, let's go take a look and see what's going on, what kind of demolition, if anything, was done inside the markets. I've got the Rhodes Momentum Indicators indicator system up on the screen here right now, and the top portion of the screen, it's the weekly chart. Bottom portion is the daily chart. So we want to see, you know, candle-wise, price-wise, where we at. In the NASDAQ Composite at this stage, all it's done, it's just simply hit and tackled its 8-period exponential moving average. It's still really just, it's in that cautionary zone, no real sell zone or sell mode out here. On the daily chart, it has not broken its 50-day exponential moving average. That is priced out at 43.91 out here. We'll see if that level can hold. It's beginning to show signs of cracking out here, but, you know, the trend is still to the upside, only entered the cautionary zone. That's on the composite. Let's take a look at the Dow Jones Industrials out here. Which has been super strong in the Dow yesterday on the daily chart, forming a 3-drive to a top pattern. So that is as bearish as you can be. That says if, in fact, the highs from yesterday get taken out, 17,152, that'll tell you just simply how strong this market is. If you take a look at the Dow on a weekly basis, it's still in what I call blue sky territory, long and strong out here. So I know that on a daily basis, we've got a reversal signal, but I can tell you on the weekly chart out here, no such thing. No such thing at all as we speak. So things are going to crack on a daily first. Well, really, they're going to crack, what, on the 30, then a 60, then 120-minute, then 240, then daily, then weekly, and monthly. On the daily chart, so we know we've got that. We know we've got that reversal signal, outside day, bear sash candle, had the whole kit and caboodle out here. So we just need to pay attention to those highs and be ready to react if, in fact, the market is able to make it back up there and take them out. But the daily message here, just a little cautionary sign. Otherwise, still moving to the upside, no problem. If we take a look at we took a look at the composite. No need to look at the NDX. Let's go take a look at the New York Stock Exchange. In absolute bearish territory, it needs like 3,500 net advancing issues. It's impossible today for the bulls to take control of the New York Stock Exchange. Nonetheless, if we take a look at a weekly chart out here, it really doesn't look too bad. Yeah, cautionary zone for sure. Price, we got a reversal signal back here. I believe it was around July the 10th. But you know, the New York Stock Exchange, when you take a look at price damage, It hasn't even touched the 50-day exponential moving average, 10,852. Even with yesterday's action out here, New York Stock Exchange wasn't able to do that. We want to watch that. If it closes below the 50-day exponential moving average, probably moves down to about the 10,372 area. That's on the New York Stock Exchange. We look at the Russell 2000. That's been the struggling area inside of the market, the small caps, and a weekly basis, definitely under pressure out here. Daily basis, though, price, in fact, is moving to the 200-period exponential moving average. That's priced at 1125. You're trading at 1137.90 as we speak right now. So we know the areas that we're looking at. We absolutely got reversal signals. I couldn't have gotten them any larger yesterday. For my preference, I would have preferred to have seen reversal signals come without such a huge, negative, nasty, implausible news event as one that we had. So we're going to have all weekend to sift through the propaganda that likely gets spewed out by all sides out there. We'll see how things play out. Take a look at the semiconductor index out here. Take a look at the stocks on a weekly basis. She's still long and strong out here. It's also shown some topping patterns out here, but boy, the weekly trend certainly hasn't given us any indication that it wants to absolutely move lower out here. It's a 50-day exponential moving average, 621.42. That will likely be its first level of support and provide us with a ton of information because we haven't seen the price close below it, but maybe about 2 or 3 sessions going back to November of last year. Probably if I go back further, we'll find it's even beyond that. Yeah. Last time it really experienced any problems with its 200-day moving average was back in August of 2013 out there. Let's take a look at the S&P 500. Let's look at it on the weekly and on the daily basis. Boy, weekly about as strong as you can get out here. Right now looks to be forming on a weekly chart nothing more than just simply a high wave candle. In essence, it is, where it's opened. It's not really that far away from where it opened out here. So a lot of fireworks, but not a lot with regard to what it actually wants to do on the weekly and or daily time frame. Let's go take a look at the XAU. Let's go see what it is doing out here. Had a little bit of a bounce here yesterday. Still looks pretty strong on a weekly basis. No signs to panic just yet. Of course, that move in gold would be a reason to be cautious here inside of the XAU. But as we speak right now, all it did yesterday was bounce off the 8-period exponential moving average on its weekly basis out here. So that's a look at that's a quick look at the weekly and the daily time frames for most of the indexes that many of you follow out there. Had a question to go take a look at Herbalife. HLF is the ticker symbol. So let's go see what's going on there. Had a request to take a look at Herbalife out here. I believe that's when the system went down. So I'm going to tell you what's going on with Herbalife right now. It looks like it's trading out at about $59.40 out here during the break, which is about 2 minutes. I'll try to get the things back online. Herbalife is yesterday moved down with a volume of 2.3 million shares now. Herbalife right now is trading into a previous downdraft from the trading session of April the 11th. The top of that is 61.30. You're at 59.43, so you're inside that. Very likely what you'll see Herbalife do is try to head down to the low, which is 51.19. Let me see. Let me pull this back here on the longer term time frame and see what it is that I can find. I'm going to put this on a weekly chart here for a moment. But if you're looking to buy Herbalife, let me see if I can find any reason. I think Herbalife, we got the war going on between Carl Icahn and David Einhorn out here. Let me put a little trend line on the chart, and the trend line that I'm taking a look at, so you can put it on your chart as well, is off. I'm on a weekly, by the way. The December 24th low is what I'm going to use as my trend line, and then the next area that I'm going to move down to is when it made this low on March 17th, the week of March 17th, out at a price level of $49.35. So that's a trend line on a weekly basis, and Herbalife has not broken through that area. Price-wise, if I were to give you an estimate of where that trend line is as we speak right now, it's probably about $56.25 or so. So if you're looking to short it, wait until you see it break its longer-term trend out there. 877-927-6648. Steve Rhodes, TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Good back, folks. We got the market right now. The Dow is up 50 points. The S&P is up 7. NASDAQ Composite up 24. Russell's up about 5 points as we speak this morning. So at this stage of the game, the bounce that we're seeing that's taking place in the market is to be expected. If you tuned in and listened to Tom's show last night, when I did Tom's show, Giselle, what I indicated was, look, the VIX had been up by 32%, a one-day rate of change of 32%. And I can tell you what accompanies that is a bounce in the marketplace, and it occurs over the course of 2 trading sessions. So what we're seeing here thus far is to be expected out there. How long it's going to last today, how long it lasts, is this more than just the garden variety bounce out there at this stage? That was my expectation when last night, after last night's close. That's what's playing out as we speak here right now. My expectation is that we actually see the market move lower over the course of the next week or so out there. We did take a look at the weekly and the daily charts, and the weekly charts still show a lot of strength. So my interpretation at this moment is that the retracement that we see, any type of pullback that we see, is one that really sets up a viable bottom at some point in time. If you'd like to know when that is, look, the easiest way is go over to the homepage at TFNN.com. Over on the left-hand side, little carousel, you'll see Mastering Probability. You'll see my photo, my mug, what have you. There's a special that we're running that's through this weekend. You can sign up for my newsletter service. There's no charge to your credit card, no charge up front. You can utilize that service for the next 30 days, and you've got access to all kinds of great tools out there. The Money Management Workshop for 90 days, the position size calculator, that'll change the way that you take a look at trading and putting trades on. You got access to me as well. So in any event, my apologies for the interruptions that we had during the last 20 minutes, but our man Daryl Martin, he'll be up for the Nadex Bull Bear Binary Option Hour. I want you to have a fantastic weekend, a fantastic Friday, and I look forward to seeing you bright and early Monday morning. Have a great weekend, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.